The broadcast is now starting. All attendees are in listen-only mode.
All right, good morning, everybody. This is your market update with Strath and John from Acorn Wealth. Of course, you can see the standard disclaimer on the screen. This is for educational purposes only, as we are not a licensed financial advisor in any jurisdiction or province. Okay, Strathy, so we'll have a look at the index. We've obviously the concerns of China are still there. We still have the same problems that we were talking about now for weeks. Looking at the S&P 500, remember today is the last day of the month, meaning that we have open range tomorrow, which we'll be discussing at length, obviously through the updates tomorrow to see where that is taking us. But if we look at the current pattern that the S&P 500 or the price action is showing us, we had 5.2 billion shares trade on Tuesday, 5.35 on Wednesday, 5 billion on Thursday, 3.95 billion on Friday. And as you can see, as we rallied, we had these contracting candles straight into resistance. And we talked early last week, that we'd expect the market to close last week somewhere between 1975, 1985. It's basically right where we closed. So and we now are just pulling back in the kind of what currently appears to be a classic reversal candle or reversal formation. So, of course, the big predictor in a lot of these technical moves is to look at where open range is, or the range that's set in tomorrow's trading. So that's going to be where we take on a lot of our kind of newer positions or short-term trades. The big thing to wait for is that open range to print. Now, some of the movers, though, we talked about NSR, Newstar last week as for put options. Those are up. Those $27 puts are up 33% this morning. So they've been having a nice move over Friday's close. And but a lot of other things are just kind of sitting steady for the time being. So they're just kind of holding the markets here at the moment. Strath, I'll pass it over to you.
Okay, just surveying this market and what's actually happening in the real economy, we're still hearing stories that, oh, the U.S. economy is strong and the fourth quarter will be good, but I don't see that anywhere. If you look at stocks like 3M, if you look at stocks like UTX, United Technologies, if you look at the chemical companies, DuPont and Dow, look what's happened to those stocks over the last 2 or 3 months. They're absolutely in the tank. And these are companies that represent what is actually happening on the ground in the real economy. And all of the shares of all of those companies are telling us that things are going to get a lot worse. Now, we said during our first big one that corporations are going to go into survival mode, and they're not going to be spending money on vehicles or travel. They'll be clamping down on expenditures of all kinds. So we're not going to have any drive in the economy from those sources. Now, on the Big One program, we're not getting positioned for what's going to happen today or tomorrow. We're getting positioned for what's going to happen from the middle of September to the end of October. And when these markets break, they break so fast that all of a sudden you start chasing. And the way this market is set up, the premiums that you pay to get into options on a fast-moving market become exorbitant. So the time to get positioned is when things are relatively quiet, and we see all of these signs that confirm our attitude toward this market. So the stocks that you're looking at to take positions in, stocks that you're comfortable with, and that you've either talked to your financial consultant or you studied them yourselves, and you're satisfied with the potential risk reward, and take it from there. But we had this hard break in the market last week. We had a rally up right into the bottom of resistance at the 1993 area. So I'm very comfortable with what's happening. This market's probably going to be fairly quiet today, but I think it'll wind up being a down day. And tomorrow's the 1st of September. And if you look at the volatility index, it's held up remarkably. There's absolutely no give in that volatility market. Just look at the VIX itself and the UVXY. It simply won't give ground. So all of these are indicators that there's more trouble ahead for this market.
Absolutely, and some of the stocks that are holding up quite nicely. LVS, Las Vegas Sands, I own puts in this one, and that's rallied right into resistance. Hasn't broken its 9-day moving average, so that's looking healthy. And you can see the volume just dried right up on that one, 8.6 million to 10 million. And then on Friday, only trading 2.98 million. So that was a complete evaporation of the volume running into that moving average. So Las Vegas Sands is still looking really good. Of course, we talked about HOG towards the end of the week. That's holding right under resistance perfectly. You can see it went straight into resistance there around 56. But we talked about what was on Tuesday morning. I think before the bounce, Strath, we said, wait for HOG. We're looking to wait for HOG to get up to between 56 and 57, and there it is, just turning around now. Obviously, we own puts in that. PKG also. You can see holding beneath its 9-day moving average, looking slightly bullish at the moment, but well, obviously the day is early, but has not broken its resistance yet either. So it should be a very exciting week, but a lot of the more active trades we're going to be looking for are going to be coming, obviously following tomorrow's market as that open range is set. So obviously we're going to have a very exciting trading room tomorrow night. Make sure everyone tunes into that, and then we have our the live stock scanning class Wednesday night. So that'll be exciting too. Anything else you want to add, Strath, for the time being?
No, I think that pretty well sums this up. We're kind of in just a holding pattern in the market right now, but it's early in the day and lots can happen. But one thing you got to remember here, this market is broken down, and there's been no really bad news headlines, and we're going to get those. There's going to be bankruptcies. There's going to be difficulties in the currency markets. There are all kinds of things that can spook this market. So just keep cool here and follow your instincts and follow your risk reward and your resistance levels. That's all I can tell you.
Oh, exactly. Well, we'll be here. We'll be obviously anything of